Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? So you can see the beautiful backdrop behind me. We're here in Queenstown, New Zealand today, and I have the pleasure of hanging out with my bestie girl, Maddie, over here. And she actually helps me with the podcast. I know maybe I've mentioned that on a few episodes, but I'm grateful that she's here. She set me all up. We got a great view behind us. The audio sounded awesome, and even the camera quality here today. So I'm just very grateful for Maddie today. But anyways, while we're over here, and I'm just going to put on my sunglasses. The sun is like right in my face today. But why we're over here is actually we're on a trip. We got Chris Noggles with us, Dad, Mom, Jason Sipple, Carson Hurling, Devin Burr. I mean, all of the Money Multiplier family is really out here on this trip, and we're just enjoying life together. We're taking some time off, doing some team building, and really spending some quality one-on-one relationship building time with one another. So before I get into the episode, because today's topic is we're going to talk about IBC for vacation funding. And maybe on some past episodes, we talked about it briefly because, right, I mean, with the infinite banking concept, you can literally use your policy for anything and everything that you want to go and purchase in your life. But let's really hone in on vacation purchases using the policy. So before we get into the episode, I kind of just wanted to share a few fun facts about Queenstown because it is a beautiful city over here. Let me tell you, actually we came here, we spent about, I want to say 3 days now here in Queenstown, and right before that we were up in Auckland hanging out. And yeah, Auckland was very beautiful as well. It's a city, right? So it's very city vibes where, you know, Mads and I were very adventurous and outdoorsy. We like the mountains. So this is our type of vibe out here. So we've been having a really good time. But just some fun facts about Queenstown is that Queenstown is really known as the adventure capital of the world with the first ever commercial bungee jump. So the oldest bungee jumper at A.J. Hackett's Bridge Bungee was at the age of 94 years old when he did his bungee jumping experience. So let me tell y'all, we actually went out to that place. I think it was about 2 nights ago, we had dinner out there and the whole group went bungee jumping. I'll tell you, Mom, Dad, and I, yeah, we sat out on that. I'm not too big into that free fall and stuff like the rest of the crew is. So we actually went zip lining, and that was a lot of fun too. So I imagine I'll probably go at some point in my lifetime, but just not right now. So another cool fact that I want to share with y'all is that there are over 80 wineries out here, with 77% of the product being devoted to Pinot Noir. And actually, I love that fact because fun fact about me is that my favorite wine is actually Pinot Noir. So something else to note is that The Lord of the Rings was filmed over 274 days using 350 purpose-built sets in more than 150 locations all over New Zealand. The use of the conservation sites and national parks meant Jackson had to employ a specialist lawyer to gain consent to film in the protected areas. So actually yesterday we went out horseback riding and we learned a lot of cool fun facts about just where we were at in Skipper's Canyon regarding how there's a whole bunch of celebrities, like one of them, Taylor Swift, filmed her music video out there. You know, the Narnia, right? And that movie, along with Lord of the Rings. I mean, a lot of these big productions were filmed right here in New Zealand. So this is my first time ever being out here. I will definitely come back, and I encourage y'all to come here as well and just spend some quality time with yourself and your families one day. So with that being said, let's get into the episode here. All right, so let's get into topic number one. So topic one, let's just kind of do a brief overview of what the infinite banking concept is and how we can utilize it for different purchases and things that we're financing in our life. And now I'm really going to hone in on vacation buying. So for instance, right? We are out here in New Zealand. This trip is probably costing us close to about $10,000 to be out there, to be out here per person. So with that being said, how are we financing for this trip? And how the traditional ways of how we can finance things is we can pay cash for it, we can put it on credit cards, we can take a bank loan and finance it that way. Well, the Money Multiplier team, you know how we're doing it is we're utilizing our whole life insurance policies that are designed for high cash value banking. So what we're doing is when I make my premium deposit into my whole life policy, that premium goes into the policy. And then now I have this immediate cash value bucket that I can leverage from the policy and pull out, take out my cash value, and then go fund for this trip that we're doing. So for instance, flights. All right, let me tell you all about our flight experience. So, I left from Orlando. So I went from Orlando to Houston, Houston to Auckland. And the flight from Orlando to Houston, that was only a 2-hour flight. That was comfortable. The flight from Houston to Auckland, we flew on Air New Zealand. That whole flight was 15 hours in the air. So it was my longest flight that I've ever personally experienced. However, I was quite comfortable. So I highly recommend pay for the upgrades, okay? I mean, totally fine to just go with the flow and sit in economy. But let me tell you, if you're going to be on an airplane for 15 hours straight, I'm okay to pay a little bit extra to be comfortable and sit up in the premium economy place so that I can put out my feet and put on my eye mask and the blanket that they come and bring you around. So what we did for those flights and the upgrades that we purchased, I mean, that flight to New Zealand and even going back home to the States from New Zealand, I mean, that's costing us right around $4,000. So what I personally did is I actually put everything on my credit card for that purchase. Because, right, I mean, I love credit cards. If I can swipe my credit card, get some flying miles, some cash backs, and some other perks, I'm going to go and do it. So what I did is I swiped my credit card for the flight that I took. And then what I can do is if I don't want to use my active income to go and pay off that credit card bill for the month, what I can actually do is I can take a loan from my policy and then go and pay my credit card bill. So then I leverage my policy, take out the loan, go pay it to the credit card people, and then now all I'm going to do is I'll just pay myself back inside of the policy. I mean, heck, y'all, you hear me say it all the time. Do you have to pay yourself back? No. Let alone even charging yourself with interest? No. But I do it because I'm an honest banker and I'm not going to steal the peas from my banking business. And if you don't get that reference, I highly recommend you go and read Nelson Nash's book, Becoming Your Own Banker, where he talks about that in the grocery store example. So all I do though, and y'all, this is so practical and so easy. Go out there to a website called bankrate.com. Bank, B-A-N-K, rate, R-A-T-E.com. And they have loan calculators. So all that I'm going to do is I'm going to go there and say, all right, the purchase price for these flights was $4,000 and I want to pay this back in 12 months or 1 year, whatever. You are your own banker. You get to set the terms for yourself now. And then I will charge myself, I don't know, 10% interest. That's just what I do personally. The Bank of Hannah Kessler, I do 10% interest because it's an even number. It's easy math and it's more aggressive on my interest. Just means that it's more money back inside of my pockets anyways. So that's what I do. I'll go out there, plug in the $4,000, 10% over 12 months, loan calculator. What does that monthly payment have to be back to myself and inside the policy? And then it will tell me. So it's really that stupid simple when we're talking about this concept, and folks just love to overcomplicate this stuff. And I'm telling y'all, it is that simple. So follow the KISS principle, keep it stupid simple, because I'm telling you, it is. So don't get hung up in the numbers, the rates of return, illustrations, and different things like that. yes, I agree. It's important to understand that when you have a whole life policy designed for the infinite banking concept, it's got to make sense from a cash value, having the money earn us that guaranteed interest and dividends, and have it be efficient from a cash flowing, projecting standpoint. But it's not about the rates of return in the illustration, because I'm telling y'all right now, you folks that get hung up in rates, go and read page 3 of Nelson Nash's book, where it talks about this is not about rates of return. This is about taking back the control of the banking function in your life. And all it is, it's so simple. All we're doing is we're utilizing our glorified savings account, our high yield savings account, if you want to use those terms. And all that is the policy and storing the money in our bank rather than at the Bank of Kiwi down here in New Zealand, right? So we are truly taking back the freedom and the processes of the banking concept in our life. And I just don't know of a more powerful vehicle that you can do this with these features and benefits. Because let me talk about this. Even though I took out the $4,000 from my policy and I went and I paid off that credit card bill for the flights, remember y'all, that $4,000 never left the policy. It is still inside of there growing interest and dividends, even though we took out that loan and we're pulling it out to go and pay off the credit card bill. But the $4,000 never left. All we did is we put the policy up for collateral and we took a loan from the general funds of the insurance company. So I'm using the insurance company's money in the real world, which then allows my $4,000 to keep growing, uninterrupted, compounding in dividends as if it was never even touched. I don't think there's a cooler thing out there than what this is. So, and I'm just kind of thinking on the top of my head right now, some questions I sometimes get, and what's making me think about this is because right before we came out here to New Zealand, Pops and I were actually speaking at an event. It's called RubeCon, and that was my previous episode. You'll see that where Dad and I were at the live event and we were filming a podcast episode out there. But we were there, and a question I got a lot was, well, when do you pay it back? How do you pay it back? And honestly, y'all, just like how I said, we don't have to pay back the policy loans because a policy loan is nothing more than a prepayment of our death benefit. So if we never, ever, ever pay back our policy loans, all that's going to happen is that loan is just going to get subtracted from the death benefit, that guaranteed death benefit that the insurance company has to pay us every single year. And then from there, whatever remaining portion, that's what's going to get paid out to our beneficiaries. So now what you're doing is you are using your good dollars today and you're paying back the insurance company the weaker dollars in the future. And then now you're leaving your next generation and that legacy, your cash flowing assets and experiences, because you've taken them on all of these vacations using your policy. So now you're leaving them these cash flowing assets and these experiences that you've built with your family and your friends, and then also this lump sum of tax-free death benefit at the time that you're passing. So just kind of think about that as you're utilizing your policies here. All right, so I kind of told y'all that the budget for this trip, it's been about $4,000 for the flights. So that leaves kind of $6,000 for, food, fashion, our shopping trips. Ooh, get this, y'all. Here in about 2 hours, Maddie, Mom, Dad, Bruce, and Jenny, some other folks on the trip with us, we're actually going on a helicopter ride, and we're headed over, and we're going to go see Midpoint. I think it's called Midpoint, right? Milford Sound. I apologize. Milford Sound is where we're going. So anyways, and this was actually an idea that Mads had, and I said, okay, that sounds kind of fun and kind of cool. So what we're going to do is here in just a little bit, we're going to load up in this helicopter and kind of take a leisure tour around the mountains out here and kind of see a really cool beach that you can only get to by air or if you go hiking for miles and miles. So with that expense, that's costing us about $1,500 per person to go and do that leisure joyride. So how am I funding it? Again, it's with the money that I'm utilizing from the policy. And what I personally do is I put it on a credit card. And then what I'll do when my statement arrives to me is I'll use my policy cash values to then go and pay for that credit card bill. I don't have to do that. But again, I just like to use the perks of what a credit card here I can use is with the perks that it gives me just using that credit card, for lack of better words. So there's a lot of cool things that we're doing out here, and you got to budget for your travels and your expenses that are going to occur as you're on the road traveling. And this is why I think it's so important that just start budgeting and start saving. I mean, totally exclude the whole life policy out of it, but you should really start budgeting and saving up for future trips, future expenses. I know as this episode releases, it's going to be right there around the tax time. How are y'all saving for your tax bill if you got to go and pay the government? So my father has always taught me, a failure to plan is a plan to fail. So start planning and really have those deep conversations with the family, sitting around the dinner table and really talking about where folks are at in their monetary life and the goals that y'all have. Set those goals with one another. And I know it can be kind of an uncomfortable conversation. I know that it's not the most favorable thing. People don't like sometimes talking about money or numbers and different things like that. But we got to get on the same page with our families, because if we don't, I mean, we're going to be walking two different lines in how we're going to be living our life, and it's going to start causing some stress and some tension between us and the family members. So really start budgeting and planning what is happening over the course of the next quarter, over the next 6 months, 1 year, and where you really want to see yourselves in those next 12 months. Ooh, y'all, hey, let's talk about this. Actually, I do have some family members, or excuse me, not family members. Well, yeah, that too. You know, a lot of my family practices IBC, but I got some families that actually they will dedicate policies just strictly for vacation travels. So get this, you know, there's actually a family I'm thinking of right now where they actually dedicate $10,000 a year as their premium inside of their policy, and all of that money that goes inside of there, that is the vacation funding policy, because they like to go on trips. Every year, and even sometimes multiple times a year, they will go and take their family, maybe it's to Disney, or they go overseas, they go on a cruise, they go to the beach, I don't know, wherever they want to go. And so what they'll actually do is they will fund their policy. $10,000 a year goes into the policy, and then they will use the cash values to go and fund for those vacation travels. So then when the vacation is over, then we have our mapping and implementation meeting. And then they'll say, okay, Larry, for instance, Larry's a gentleman on the mapping team. And Larry, hey, I just went on this vacation. Here was how much I spent. So Larry, what do I need to pay myself back inside of my policy? And I want to do it over the course of 12 months to recoup that money back inside, just place the money back there so then I can prep for my next year's vacation travels. So that's just one example of how a family is utilizing their policy for vacation. And if this is your first time ever listening to me or hearing about the Money Multiplier, what is so unique about us is we have that implementation team that is there who is helping our folks utilize and strategize how they're using their policy within the different things that they're wanting to do within their financial life. So every quarter, if I do not hear from you or your mapping specialist doesn't hear from you, we're calling you up, just checking in with you, because this is all about talking about the process of your banking inside of your life. And so with those quarterly meetings, we're checking in. Hey, how are things going? How's the family doing? Is there anything that we can help you with? And we're always creating and maintaining that working relationship with you that honestly, y'all, up to this point, most of my clients, they are now my friends that I talk to sometimes almost on a weekly basis. And I apologize if you could hear that there's a motorcycle going through. But I love this business so much because, yeah, we are helping people. We are helping change their lives and their financial health. But at the same time, what is so impactful to me is that I am able to help serve you so that you can live a very prosperous life. And then now it's just us even creating our own friendship that comes from just meeting one-on-one as clients and you being my prospect first. So I just love this stuff. I even just got a message not too long ago. Shout out to Tess. Tess hit me up and she says, hey, I saw everybody went zip lining and bungee jumping. Hannah, I didn't see your video. Send me your video of you bungee jumping, right? And Tess started off as a client with us and now she's really a lifelong friend. We're even a part of a women's mastermind group in a Bible study that we do every Wednesday. So this stuff is just so cool. It's so much more than just talking about our financial health and our financial futures, but there's a lot deeper meaning as I've been in this business now going on 7 years teaching this concept, and it's really made a huge impact on my life and my financial health and just all aspects of my health personally too, in my personal development. So I appreciate y'all. And sometimes I know I may not say it all the time, but just know I truly appreciate y'all for always tuning into my episodes, hanging out on our Wealth Wednesday webinars, our Ask Me Anything series that we always do, and just different things like that. It's just really cool, the community that we built up to this point. So I applaud y'all for being here and really tuning into this episode. So with that being said, I appreciate y'all again for being here. And just to highlight the key points. Number one, don't be afraid to pay yourself first. Save your dollars. Don't keep just spending everything that you're making. So I challenge you, when you bring in $100 through the door as your income that you're flowing to the family, don't just think you have $100. I challenge you, start thinking that you only have $90 and put that 10% to the side. Put that $10 to the side, and that $10 or your 10% should be the money that goes inside of your policy. So pay yourself first, keep planning, keep budgeting, and then on top of that, start utilizing your banking system. Your money becomes available to you immediately inside of the policy. And so now what are we going to be using with this money? No, don't just go to Vegas and go gamble it all. Really have a strategic working plan of how you're going to be using this money within your life and just different experiences, because that's what life is all about. Yeah, I know we hone in on money all the time, but y'all, life is so much more than just money. Money is nothing more than just a resource, a tool to get us to that financial freedom that we have so that we can take back the time freedom within our life. So last little comment I want to say too, y'all get this, something that I've learned while being here overseas in New Zealand is that the New Zealand dollar, it's actually worth about 65 cents to one American US dollar. So everything that we've been seeing around, like let's say we go out to dinner and the dinner bill is $100. I'm like, cool, we're saving money because it's only $65 in the United States. So that's the conversations I've been having myself. And I know that's not correct. That's not right. But I thought that was a cool little fun fact too, that the New Zealand dollar is only worth about 65 cents to one US American dollar. So something else I learned while being out here on this trip. So if y'all have used your policies to go out on trips, I want you to chime in. So put down below in the comments where you have gone, the experiences that you've had with your families and what y'all have been doing. And I really want to hear your story and how you've been implementing IBC with taking your family vacations. Or maybe you like to go solo backpacking out there overseas or in the Appalachian Mountains. I don't know, just whatever you're into. Actually, speaking of right now, get this. My grandpa is actually age 78 or 79. I think he's 79 right now. But anywho, he's 79 years old. And actually, him and my Uncle Tug just went backpacking, and they're up in, Matt, do you know where they're up in, Grandpa? He's somewhere up in the mountains. I want to say he's right around like the Rocky Mountains, but he's going actually on a 6-month backpacking trip, and he just left about 7 days ago. So we'll see how long that they last. You know, Grandpa's actually in great shape, and Uncle Tug wanted to go, so Grandpa says, "Okay, I'll go with you, Uncle Tug." So we'll kind of see how that's all shakes out when they get back from their travels. So just feeling very grateful, feeling very blessed today, and oh my gosh, y'all, just this view behind me is insane as well. So until next time, let me know how things are going. Write into me if you have questions. My email is Hannah, Hannah, Hannah spelled the same ways, forwards and backwards, Hannah at themoneymultiplier.com, and really tune in and write into me if you have questions regarding what you need help with. And Mads is here now with me. So actually now she's showing face. I know I talk about her all the time. And actually she's wearing some new merch that we have too. So I love this. So Do Your Dollars Make Sense merch, and then turn around too. Listen to the Money Multiplier podcast. So we have some shirts coming out here soon. So if you want some merch items, we got even some other designs. Maddie designed all of this, so she is really my brains behind the operations. All I do is I just show up and start flapping my gums. So I appreciate you. Do you want to say anything to the listeners?
No, I'm good. I'm good being behind the scenes.
All right, we'll catch you next time, y'all. See you next week. Bye now.